Welcome to the BuyBox Experts podcast. We bring to light the unique opportunities brands face in today's e-commerce world.
Hi, I'm James Thompson, one of the hosts of the BuyBox Experts podcast. I'm a partner with BuyBox Experts and formerly the business head of the Selling on Amazon team at Amazon, as well as the first account manager for the Fulfillment by Amazon program. Today's episode is brought to you by BuyBox Experts. BuyBox Experts takes ambitious brands and makes them unbeatable. When you hire BuyBox Experts, you receive the strategy optimization and marketing performance to succeed on Amazon. BuyBox Experts is the only agency that combines executive-level advisory services with expert performance management and execution of your Amazon channel strategy. Go to buyboxexperts.com to learn more. Before I introduce our guest today, I want to send a big shout out to the team at Disruptive Advertising. For off-Amazon advertising, Disruptive Advertising offers the level of service highest in the industry. Focusing on driving traffic, converting traffic, and enterprise analytics, Disruptive helps their clients increase their bottom line month to month. Check out disruptiveadvertising.com to learn more. Our guest today is Paul Gray, the CEO and founder of A2X Accounting, a software firm that posts online sellers' Shopify, Walmart, Amazon, and eBay sales and fees directly into QuickBooks or Xero in tidy summaries that match the payments to the seller's bank account. Paul is also the founder of ExportX, a firm that specializes in celebrating New Zealand brands by making them available around the world. Paul is bringing his expertise to us today, sharing best practices on how to turn proper accounting into a vehicle for better understanding overall decisions that need to be made. So welcome, Paul, and thank you for joining us today on our BuyBox Experts podcast.
James, thanks for having me on the show.
I've known you for several years. When we first met through the Prosper Show 4 or 5 years back. From the first time I met you, I've been impressed by your serial entrepreneurial spirit. You sell online and you support firms that sell online. What led you to find opportunities in the online marketplace space?
Well, what led me to find opportunities in online marketplaces? Well, really, the origins of A2X, the software service used by so many thousands of Amazon sellers now, go back to, well, the early days of FBA. You know, you just mentioned you were heavily involved in that, and I remember that too. You know, back when FBA was an experiment in a corner of, it was Reno 1, right? The first
a long time ago.
And I shipped some products in there, and received perfectly, and made that first sale through the Amazon.com marketplace, and then a couple of weeks later got that first settlement payout. But of course, the dollars that got paid out did not exactly match the sales that we'd made. So the next question is, what's going on here? There's clearly some fees and some other transactions. How do we account for that? That settlement period spanned a month end and a quarter end. So some of it must have related to the previous financial period. And, the dollars were small with your first settlement payout. But in my mind, there's only one way to do that financial side of running a business, and that's to do it right from the beginning. And so I waded through that, downloaded that settlement file, and I thought, what on earth have we got here?
Right.
And worked out how to do it in a spreadsheet, as probably so many people do. And we built a process around that to automate that using spreadsheets, and then we switched that into cloud spreadsheets so we could automate it further and that kind of stuff. But it was pretty clear that that was not the way to run a business that was going to be anything other than a very small e-commerce business. Look, spreadsheets are unreliable. There's curveballs that turn up in those data files, and spreadsheets would break. By then, we were selling also with Amazon in the UK and Europe, so you have multi-currency challenges and international accounting. And so as software engineers, it was pretty natural for us to build software to automate that would be robust and reliable and automated, that could handle all of that.
But building a technology to support your own seller business is very different from deciding you're going to become a SaaS operator. So how did you make that shift and say, we've got something here that's good enough that let's figure out how to sell this and make it available to thousands of sellers?
Yes, it is. I absolutely second that. Lots of us can build tools for our own use, but commercial grade software is a whole different thing. I guess I had the advantage going in that prior to starting selling with Amazon and getting into e-commerce, I'd had a 20-year career building a software product company and taking that international, et cetera, and exiting that. So I had an idea, and running a software team of 500 people, 250 of them engineers, you get an idea of what real software looks like and how to do it properly, how to do it at scale also. And so how did we make that transition? Well, I think what actually happened is, I'd probably mentioned what we were doing at one or two conferences in Seattle and here and there. And we started to get inquiries from accounting firms in the United States who'd heard about what we were doing. And they were saying, hey, can we use what you've built? Because that's what we need for our clients selling on Amazon. And so we made a version that people could use almost, I'd hesitate to call it more than a prototype, looking back at it, but it was really when, it went from, 1 to 2 to 50 to 100. And we said, hold on a second here. Our theory all the way through had been that as an early Amazon seller, we would see the challenges in running an Amazon business and be able to automate some of them with software. So I guess we were looking for that opportunity. There were a number of tools we built, and some of the others people loved but didn't want to pay for. Some of them people didn't see the same need that we did. But with A2X, it was pretty clear. People were asking for it, and so that was the decision to then take that prototype as the starting point and invest in rebuilding it as a commercial grade, high quality, highly scalable, secure SaaS product that would be able to support, not just hundreds or a few thousands of transactions, but millions of transactions. And so we took that decision, we invested, we built that, and then we launched it properly, I'm going to say, in 2016.
Just about the time that we met. So let me ask you this, Paul. Over the last decade, I have worked with, I can't tell you how many Amazon sellers that do shamelessly bad accounting of their Amazon business. And while Amazon hasn't always provided the most user-friendly financial files for sellers to use, how do you coach sellers on the need for good accounting and what to expect from Amazon financial data?
Yeah, I mean, like you, I think I'm continually amazed and impressed at how well so many Amazon sellers do without accurate financials, whether they're doing cash accounting or no accounting at all.
No accounting. The shoebox accounting at the end of the year.
Yeah, it's so impressive how far people can get. Sooner or later, though, something's going to happen. And they're going to have to address what's going on in the back office, or even perhaps start a back office function or outsource to an accounting firm that can do it for them. And, some of those situations are things such as, well, a really obvious one, tax compliance. And, in Europe, it's VAT compliance comes first, even before income tax compliance. And you can get a certain way with cash accounting, but once you're above certain thresholds, you're basically not legal if you're not doing proper accrual accounting. So that's one of the triggers when people sort of realize that. Another one is when people go to look for funding. Maybe they're looking for funding for growth, inventory, or building growth into their business. A lending institution is going to want to see proper financials. Otherwise, your borrowing options really are limited to those really expensive cash flow funding options, which can be a double-edged sword. And another one is when people are thinking about, they've maybe built value in a brand, especially under the private label FBA seller model, if it's about building a brand and brand value and maybe thinking about exiting that brand. The valuation is predicated on accurate financials. So if someone's interested in purchasing your brand from you, and they're going to ask for your financials, if you don't have accurate financials, they're just going to draw a line through the valuation, divide it by 2 or divide it by 5.
Right.
So that's another one of the things that we see. People are, it's an emergency. We need to get our financials up to date, which sometimes has to go back years of reconstructing what's actually been happening.
So, Paul, what are some of the biggest misperceptions that you've seen Amazon sellers have about the financial information in their businesses? Put a little bit differently, once a seller becomes an A2X accounting customer, what positive changes become most obvious to them?
Yeah, I think perhaps the number one is that often for the first time in their business history, they can trust the numbers that they're seeing in their profit and loss statement and their balance sheet. And just to give some context to that, and I know this from my own experience, if you get from your bookkeeper a profit statement that says, oh, you made 60% margin on sales this month, and then you get the next one and it says, oh, you made only 10% margin this month, and the next one it says 25%, you just go, that's not right. None of those numbers are right, so I can't trust any of those numbers. And why does that happen? It's because often an accountant will use the same accounting model for e-commerce that they use for another retail business, a corner store. But e-commerce is different. It's a different accounting discipline. There are a lot of timing issues. And the thing is, running a business, you need to know what that gross margin number is. Firstly, because it's fundamental to your profitability. You don't want to be selling at margins that are too skinny to cover your overheads, or let alone leave any profit for you. And secondly, you need to be able to see the trends. For that to happen, it needs to be accurate. And so one of the things that A2X will do to achieve that trust in the profit and loss statement is, firstly, it will separate out the balance sheet items that are coming through in those feeds from Amazon. There are a lot of balance sheet transactions in an Amazon settlement. There's
a single order, you could have 3 or 4 different line items. Absolutely.
Yeah, and on top of that, sometimes you've got Amazon lending transactions in there. For a start, you have sales tax transactions these days, right? Those are balance sheet items, not revenue or expense. And then now, especially with the newer seller accounts, you have the holdback periods, right? So when you get a payout, often it's a payout for transactions that happened, up to a month ago, and there's amounts carried forward. And so you're almost running a sort of a semi-receivables balance. And those transactions need to be put in the right financial periods. A2X takes care of all of that. And then that's on the, what's your actual revenue and your actual variable selling costs. But the other big component of gross margin calculation is what is the cost of goods sold in that financial period. And it's and this is where a lot of maybe conventional retail accounting goes astray. In e-commerce, there are often long international supply chains. You place an order for inventory today for $100,000. That's not an expense in November's profit and loss statement.
No.
That's actually a prepayment, and then when the inventory arrives, whenever it arrives, it becomes an inventory asset on your balance sheet. Those are balance sheet transactions. And then, in February, if we sell 1,000 units, we want there to be a COGS number in our profit and loss statement of what the cost was for 1,000 units out of that $100,000 that we spent this month. Now, A2X will do that, and by its ability to match up the cost of goods sold number with the revenue number, and split out all the things that are balance sheet items, that's how you get an accurate margin number. Now, once you get an accurate margin number month to month, now you're cooking on your financial side, right? Because now you can see your true gross margin, and you can start to look at your overheads, and you can see your balance sheet position, and you can have financial confidence and make decisions about your business from an informed financial position. It just eliminates that whole financial flying blind problem that so many people are finding themselves having to do.
One of the challenges we have with so many brands that are new to Amazon is they show up, they put all their catalog onto Amazon, they treat it as one blob, one total entity, and being able to break things out and look at individual P&Ls by SKU, that's a concept that's completely foreign to them. And yet the competitive landscape is going to be different on every one of those SKUs. And so being in a position to know how many products am I selling where the only person making money is Amazon, and maybe I should exit those products, that kind of situation, we run into an awful lot. And it's challenging for brands that don't necessarily have good distribution control. And there's unauthorized sellers selling their products, competing against them, driving prices down, creating situations where the brand is not in control of what ultimately will be the retail price on their products on Amazon. Mm-hmm. And lo and behold, they're losing money every time they sell one of their units of product. So, these kinds of situations are foreign to most brands that haven't participated in a competitive marketplace like Amazon. Mm-hmm. I'm curious if there are other unexpected ways that Amazon sellers can make better decisions now that they have accurate, updated accounting. Have you seen some clients do some things, very, very clever things that would never have been possible without this kind of granularity?
Yeah, I think that a couple of things come to mind, and you've touched on products going into FBA, and then if you don't control the buy box, you have that stock there, and if it's not moving, you can get into trouble. And I think businesses that maybe have inventory systems in place for managing their own warehouses or their own 3PL stock, those don't really, as a rule, handle the stock that's in FBA very well from an accounting point of view.
Right.
And this is one area also where A2X can help, because related to the cost of goods sold numbers that it can generate for you, it also will give you a monthly statement of the inventory that you have in FBA at the end of the financial period, which you need for the balance sheet. So with a conventional, some people try to take the approach of synchronizing everything near real time, but FBA data does not operate near real time. You cannot go into FBA right this second and establish exactly what that number is, because Amazon doesn't know it. There's a time delay.
So let me ask you a trick question here. Amazon is neither a FIFO nor a LIFO model. So how do you account for these weird situations where the inventory you haven't sold might actually be cheaper to wholesale today than back when you bought it a month ago? I know I'm asking a software engineer this question, and it's totally nerdy accounting question, but I was a third-party seller once upon a time too, and I ran into this problem all the time where I didn't get too fussed about it, but I realized it's $5 more expensive or $5 cheaper a unit today than what it was a month ago. And I don't know how to recognize profitability.
Yeah, well, look, there are different accounting policies towards how to value inventory, most of which fall over at the hurdle that you described, which is you can't do LIFO or FIFO or anything with FBA because the information simply isn't available.
Yeah.
So what I can talk about is an approach that I think makes sense for FBA inventory, which is to work out and regularly update an average cost per SKU that is appropriate. Now, some people's policy will be to work that out on historical average cost. Maybe if they've got stock in their own warehouse, they'll apply the same average, which maybe they do manage FIFO. They could apply that and say, well, that's going to be pretty close to what we have in FBA. Another way to do it, which is perhaps a bit more aggressive and maybe appropriate to the Amazon marketplace, is to value it not at historical average cost, but at replacement cost or value, assuming that maybe there's an element of expiry or perishability about that inventory, and to write that down if it's been there for too long. But at the end of the day, the value of that stock is the number that is going to show up in the COGS, cost of goods sold, when you sell it. So decisions about inventory valuation are, when it comes down to it, actually decisions about cost of goods sold and margin. So, that's what should guide that decision on inventory valuation, in my opinion.
I'm a big national brand. I've been selling in traditional brick and mortar through distributor model. Now I'm doing direct to consumer on Amazon. I have an in-house accounting group, but now I'm having to account for this thing called Amazon where the rules of accounting don't seem to work the same. How have you seen larger brands who have no experience with e-commerce? How have you seen them deal with, I don't want to say two sets of books, but two very different sets of assumptions as to how to account for what's going on in their different sales channels?
Well, I think the accounting prerogative is for accuracy of accounting for sales, e-commerce sales, fees, and balance sheet items, so that it balances with the cash that you're getting from that channel. Because if it doesn't match the cash that you're receiving, then your numbers are wrong, and you don't know how wrong they are. Whereas if you can reconcile to the dollars in the bank account, then you know you've got everything accounted for. And that's perhaps one of the big things that A2X brings to the table. You mentioned that A2X connects to QuickBooks Online and Xero, the small business cloud accounting systems, and you're absolutely right. And we've got some very nice integration that allows e-commerce businesses to scale up to really very large volumes on those small business accounting packages. But the scenario you described, where it's a bigger brand that's adding an Amazon as a channel, chances are they'll be on an ERP or a mid-market accounting system. And so lots of those businesses also use A2X. And what they're doing, they're not needing the simple integration and automation that the smaller business people do, but what they do need is the accurate accounting journals representing what's going on in the Amazon channel that balances to the cash that's coming out of the Amazon settlement payout system. And then they're posting those into their ERP using whatever method they want, whether they build their own integration or just a couple of times a month having somebody key that in. And so, the NetSuites and so forth, A2X is often used in that situation. And especially when the volumes get right up there, if you're doing thousands, tens of thousands, hundreds of thousands of orders a month, the ability to shield the back office people, let alone systems, from that transaction volume really delivers a lot of value. I mean, can you imagine asking a team of bookkeepers to wade through, 300,000 orders a month? Each order has got 10 line items. And,
Right.
Yeah.
So let's talk about that. E-commerce obviously has accelerated aggressively during the COVID period. Consumers are shifting the way they allocate parts of their wallet towards e-commerce. Are there short-term changes that your firm, in supporting sellers, short-term changes that your firms had to go through in dealing with some of these changing consumer preferences to move online, and hence sellers having to get more aggressive with having a presence online?
Yes, and it stems from the desire of the A2X team that all e-commerce businesses should be able to have those accurate e-commerce financials that they can trust to make decisions. I think, given that A2X is about automating and streamlining the back office function, we're a little bit removed from the consumer behavior, except as it shows up in the trends and so forth. But I think a couple of things that come to mind. We've seen, and I'm sure you've seen this as well, James, so many businesses that maybe had a cursory e-commerce capability or a website have said, okay, we've got to get organized. And they've either added a Shopify store or they've got more of their catalog onto Amazon. And it really had to ramp up that as a channel, because it goes from being secondary to being, in some cases, the only channel during lockdown periods. So we've really worked hard to support all of those people that are adding or upgrading their e-commerce capability. I think the second thing that happened, and I'm sure you would have seen this firsthand, James, earlier this year. Firstly, with the pandemic, when it first took hold in China, and all those factories were locked down around that Chinese New Year period, that caused havoc early on in supply chains, even when those of us in other parts of the world were, thinking that's not affecting us. Well, it was, right? People couldn't get stock to market, and if they were ordering inventory on, a sophisticated just-in-time basis or anything like that, suddenly they're facing the problem of not being able to replenish top-selling items, and that can be devastating for your top-line revenue, your bottom line. And then when, a month or so later, when the pandemic really took hold, and Amazon FBA was under such stress, right, and having to prioritize essential product lines and categories. Entire other categories were closed to inbound shipments, and same effect again at the other end of the supply chain. If your category is closed and you can't get, and Amazon is your only channel online, and your offline channels are locked down, that was devastating to people. On the other hand, if you happen to be selling foodstuffs or anything deemed essential, you kind of have the opposite problem, which is all your stock suddenly sold, and how do you get more because the FCs were full? Right. So the upshot of all of that is that there's a proportion of big Amazon businesses or businesses with a lot of sales through Amazon, the Amazon channel, realized the business risk that they'd taken on without probably thinking too much about it, because any disruption to that supply chain at the factory end, if you're sourcing from a pandemic affected country, or at the delivery to FBA or Amazon closing categories, all of those things were shown to be quite devastating to a business's viability. Now that leads people to think, how do I mitigate that supply chain concentration risk, I guess you could term it? What do I do? Well, the answer is you diversify. You add a second channel, a third channel. And so...
not just a sales channel, but also a manufacturing channel.
Manufacturing, secondary stock locations, things like that. And so I think the obvious beneficiary was the Walmart marketplace, with a lot of big Amazon sellers. And I'm sure they were probably promoting the Walmart marketplace to a lot of Amazon sellers. And so you look at those numbers of sellers on the Walmart marketplace, and it's doubled in recent months. Yeah.
Although, Paul, one of the peculiar things we saw is the companies that did best on Walmart.com were brands that were already in the physical stores, i.e. they had a first-party relationship with Walmart, because those are the only brands that got curbside pickup. All these online-only brands, they didn't benefit from any of that increased demand. So yes, you could buy something on Walmart.com and have it shipped to you, but it wasn't the same kind of volume lift that the brands that were already on the physical shelves were experiencing. And at least here in the United States, a lot of brands don't want to be on the Walmart physical shelves. They don't mind being on the marketplace, but they don't want to have that same kind of relationship with the Walmart retail stores.
Yeah, and if you're not going to do that, then you look at bringing up your own brand store or a store for each of your brands. And
yes.
Of course, Shopify has been an enormous beneficiary of that, as have the others. And how that was reflected back with A2X is we had businesses and accounting firms relying on A2X for the Amazon accounting. There was a growing chorus of people saying, hey, we use A2X, that enables our business with Amazon. We need something of that caliber for these other channels, which are increasingly important. Right. And that's what led to us introducing A2X for Shopify stores last year. And a couple of months ago, A2X for the Walmart marketplace, and then just a couple of weeks ago, A2X for eBay sellers as well. And so that's where we're responding to that diversification of channels and people in those different channels, really identifying the need. I guess they've been able to see what's possible in having accurate e-commerce financials with Amazon sales, and say, well, hey, why can't we have that for our other main e-commerce channels? And so we've been working very hard to respond to that need.
So let me ask you, even before the lockdown, we at BuyBox Experts saw even decently sized brands choosing to stay away from the Amazon channel or taking no more than a nominal interest in the channel. How do you see brands today changing their outlook about Amazon? Beyond the obvious, well, I guess we got to be on Amazon because that's where customers are. I mean, there's more to it than just sort of giving up or giving in and saying, fine. Structurally, you have to rethink, okay, I'm now going to have this major secondary channel. I may have to split inventory. I may have to do a bunch of other things that I wasn't prepared to do as an organization. You're seeing companies that may not even be ready to handle a second set of financial accounting. Are there other things that you've seen as companies have said, I guess I have to be on Amazon. This is the year I have to be there.
Yeah, well, I mean, it's a real dilemma, isn't it? And in our business, we tend to see people who've made that decision that they will be selling on Amazon. But I think also, James, there are entire categories of products that are not sold on Amazon at all, and maybe never will.
Right.
And so you see huge growth in, a lot of those people will sell through a Shopify store, for example, because the customers for those categories of products, they know they're not going to get that product from Amazon anyway. I guess the flip side of that is if your product is eligible for Amazon, which, let's face it, is umpteen millions of products, and you're reluctant to have your brand on Amazon if you're the brand owner, I'm not going to say it's an easy decision, but the way I think about it is, first of all, it should be about customers, not necessarily just about you. I mean, yes, you own your brand, but think about your customers.
Yeah.
If your customers want to buy through Amazon for their own reasons, they know it's going to get delivered. They've already put in all their credit cards and delivery addresses. It's convenient. Whatever reasons that they have, if they are wanting to buy through Amazon, why are you stopping them from buying through their preferred channel? I'm not saying it's one answer or the other, but I think the customer should be at the center of the decision.
That's how Jeff Bezos thinks. Start with the customer.
I think so. Yeah. Well, he's got a lot of things right, and I think that's probably one of them. I think another a part of the dilemma is that if you don't have your product on Amazon and manage your brand story and how your brand is represented in that channel, then chances are your products are going to end up there anyway, but you don't know who will be representing them or how well or how badly or how accurately, and that is likely to harm your brand. So in my view, it's better to seize the initiative, do the brand registry thing and all the copy, trademarks and so forth, and get your brand represented properly in that channel, because so many customers use that as a reference, the reviews, all of that information, price reference or whatever it's going to be.
Yes.
To me, to leave a vacuum in that channel is to risk a whole lot of brand harm.
And give your competitors a huge leg up on you, which is,
Well, I think so. There's another argument that if people are looking for your product, if they can't find it, then they're obvious, and they want to purchase through Amazon, their obvious next step is to buy the next big best thing that does what you would have done for them. Yeah, absolutely.
So I want to ask you, you told us at the beginning of our discussion, you spent 20 years building other software companies, and here you are developing accounting software for brands on Amazon. Is there a particular moment where you realized, actually, I'm pretty good at doing this? I can shift to selling software in an area where prior to this you didn't have experience, but you know you're onto something big. Was there a point where enough people were asking that you said, there's clearly a business opportunity and I'm going to embrace this?
Yeah, that's a good question. Is there a point? Well, I guess it's a progression, isn't it? There's a point where it's, hey, this is kind of fun. There's a point where other people must face this problem. Surely other people will need this if we can get it working for our own e-commerce transactions. And then there's a point where you start to get that feedback from people actually using it. And one of the things that I'm most proud of with with A2X is that customers take the time to write reviews and post them online. There's half a dozen software app review sites run by Gartner Group, and the accounting software people run app directories, and Shopify has one, Amazon has one now as well. And people have taken the time to write reviews there. And, if I'm ever having a down day, all I've got to do is go and read some of those reviews, because people write the most amazing things. I've seen people say things like, A2X changed my life, and that has to be written by a bookkeeper, right? That was buried in broken spreadsheets and suddenly got 3 days a month of their life back. But, it's when you get, I've worked with a lot of software products over through my career, and I've never seen feedback like that. So I know that we're really solving an important problem that helps out a lot of people, and we're working hard to do it at a price that's really, really good value.
Yes.
Saving people a huge amount of time, and more importantly, helping them run their e-commerce businesses successfully. I guess the other thing we're particularly proud of is that over 500 accounting firms have adopted A2X, and they deploy it for all their A2X clients. I think there was one of them, a firm called Seller Accountant out of Georgia, made a YouTube video where he said, A2X is non-negotiable for all my clients. Which, it's tremendous. But I think, actually, if I could just go down that route, James, I think one of the things that we've really noticed over the last couple of years is that is the emergence of e-commerce accounting as a specialist professional discipline within the accounting and bookkeeping space. There are a number of mid-size and bigger accounting firms that have started specialist departments or divisions that focus on e-commerce, recognizing that it's a specialist discipline. And then there are startup accounting firms that are almost using a software startup model, offering fixed monthly price subscription services and standardizing their processes and being very clear about who they serve. We serve Amazon sellers that are this size to this size, or we have this product which is for people just getting started as a private label Amazon seller. Some of them even specializing in Shopify accounting, for example. And these firms are doing a fantastic job, because they're offering a really high value outsourced service. And of course, as Amazon sellers, where so many are predisposed to sticking to the knitting and outsourcing non-core things, and accounting is one of those. Who of us wants to really do our own?
Or as it turns out, many of them don't even want to do accounting at all. Let alone outsource it.
Yeah, well, you can only go so far with that particular approach.
Yes.
But you're seeing firms now. There's one called Click and Mortar Accounting, specializing in e-commerce, of course. In fact, there's one called E-commerce Accounting LLC, started by a lady called Cindy Smith. Really serving e-commerce businesses and Amazon sellers in particular. And some of them would be, I would suggest the ideal go-to people for advice for bigger brands we're starting to sell on Amazon, they're going to run into these questions of, well, how do I account for that stuff? And you really do benefit if you have a specialist accountant involved. There's another one that comes to mind called Catching Clouds, based in Colorado. They're really one of the thought leaders in best practice e-commerce accounting.
We actually have Scott joining us on the podcast shortly. So, yep.
Right, are you? Yes. Well, by all means, pick his brains, because he'll be able to talk in far more detail than me about the ins and outs. And so I guess one thing for people to consider is, whoever's doing your bookkeeping and accounting right now, if you feel that they don't really get Amazon, I can assure you there are a growing cohort of bookkeepers and accountants out there that do understand Amazon accounting, and they don't have to be near you. They'll provide that service from wherever they are. In fact, one of the things that we at A2X have done is we help e-commerce businesses connect with the right accounting firms that have the specialist skills for them. There's a section of the A2X website, probably called something like Find an E-commerce Accountant, that will help you put in what you're looking for and where you are. Because, of course, the people in the UK and Europe, they really need that VAT expertise.
Yes.
In the United States, it's more about sales tax, as well as the various factors involved in e-commerce in the USA. So that's a good resource there for people as well, if they're needing a bit of extra help in this e-commerce accounting.
That's great. Paul, that is all of our time for today. I want to thank you for joining us. For those of you interested in learning more about Paul's A2X company, please visit a2xaccounting.com. Thank you, and we'll see you next time. And now, to finish today's podcast, I'd like to share some final thoughts. For third-party sellers to be successful on Amazon, a critical lever will be soliciting feedback from customers. We at BuyBox Experts are really big fans of the team at Ecom Engine and its tools that help Amazon sellers to simplify the process of messaging customers of Amazon orders. To learn more, go to ecomengine.com. And with that, I want to thank you for listening today, and I look forward to joining you next time on the BuyBox Experts podcast.
Thanks for listening to the BuyBox Experts podcast. Be sure to click subscribe, check us out on the web, and we'll see you next time.